Welcome to NRI Wealth Builders, everybody. Here with me are Sri and Sridhar, and today our topic is emergency funds. But before we get into it, just a quick disclaimer. Everything we discuss on this podcast is based on our own experiences, opinions, research, and conversations. We're not financial advisors, tax professionals, or legal experts, and nothing on this podcast should be taken as professional advice or legal or investment advice. Always do your own research and consult with a qualified professional before making any major financial decisions.
Okay, I think let's take a second to just recap some of our previous episodes before we dive right into this one. Let's start with episode 1, which was, of course, an introduction to this incredible podcast. We hope our viewers have been enjoying everything so far. We just introduced what we are doing, our backgrounds, and ultimately why we started this. Episode 2 was what do we, the three of us, value more than money? Sometimes money is given a high podium, but there are also things in life that are not as tangible that are also more important too. So we just discussed those in that episode. So check that out. And our last most recent episode was good debt versus bad debt. We talked about how debt itself isn't necessarily good or bad. It's really about how are we strategically using it to help us build a better future. So these are the past 3 episodes we had. And we're really excited to get into today's episode, which we will be talking about in a little bit. I won't spoil it, but super excited to chat with you guys today.
Thank you, Sri. Thank you, Nishi. Welcome, everyone. Why don't we start with the icebreaker? Do you guys know what's happening in the news? We know Elon Musk is the richest person in the world.
Mm-hmm.
Do you think he is richer than a country? Do you know if he's richer than a country?
I believe he's
Oh, I
richer
bet.
than many countries, right?
Yeah,
Many,
definitely.
many. Yeah.
So it's tricky. He's richer than GDP of many countries. Not really
Mm-hmm.
richer than a country. It's a GDP of the country, right? If you take GDP of the country, he's richer than almost every country but the top 20 with the GDP. So he has enormous money and enormous power. When we put that money against the country's GDP, it's just too tall. So I don't know if it is good or bad. It's people to decide whether one person can have so much power, but it is what it is, right?
Mm-hmm.
But do you think a person like Elon Musk can have liquidity problem? He might be richest in the world. Can he have a liquidity problem? What is liquidity?
I mean, liquidity is just having available cash on hand, right? Easy
Exactly.
access to cash. Yeah.
So very unlikely that he will have liquidity problem. It might,
Mhm.
right? You might have a lot of effort, a lot of assets, but still have not having access to cash to pay the bills, do things. So this is why I think emergency fund is important for financial wellness. I think we
Mm-hmm.
need to start with emergency fund before talking about complex topics like investing in stock, real estate,
Mhm.
all complex structure. You need to talk about liquidity, which is emergency fund in a common for a common man is like
Mm-hmm.
really, really, really important. Especially in NRI case, there could be emergency here, there could be emergency in India, right? You had a
Mm-hmm.
flight ticket itself is like $2,000, and then another uh, $3,000 to $4,000 expenses for each person, right? So it's
Mm-hmm.
a big expense. So emergency fund is very, very important. It is not health insurance. It's nothing to do with health insurance, right? Emergency fund is a lot of. So we dig deeper and expand this episode. What an emergency fund is, how we can kind of look at it and all that. Now, what qualifies as an emergency? Any guesses? Three.
Hmm. I mean, I just think to me an emergency is just something that's like unexpected, right? But I think the
Mhm.
gravity of what an emergency is to someone might be different to what it is to someone else. Um, but looking at it from a mature standpoint, I'm gonna say like medical bills or I guess losing your income is also like a domino effect towards not being able to pay a bill, right? Not
Yeah.
being able to pay your mortgage, that also sets you back months. So that's what I would say.
Yeah. But to me, it is, mainly income loss, right? Where if
Hmm.
something happens to my job, and I don't have fixed income to pay my bills, to do my, to live a livelihood, then that becomes a problem. So there are payments coming down. Nobody cares. They want
Right.
Hmm.
your payments. So that's really an emergency fund.
Hmm.
But you could have something like a, big medical bill, or your car broken down, all those things. There are some other ways to deal with it. You don't have to use your emergency. But what is really not an emergency? Nishi, do you want to take a stab at it?
Yeah, so some things that are definitely not an emergency is something like going on a spur of the moment vacation or a Black
Yeah.
Friday sale. I'm very, very guilty of that. Any sales, and concert tickets. I know that's a big one in our generation too. Yeah, so those
Yeah.
are some
I was
non-emergency.
about to quote Taylor Swift. It could run $1,000 a
Wow, yeah,
ticket.
those are insane. Yeah.
And the soccer football matches happening. The news nosebleed seats are $4,000. You don't even
Hmm.
see the stadium,
Oh my gosh.
Right.
right? So it's just they're not emergency, right?
Mhm.
Emergency is what
Hmm.
it
Yep.
affects you
Right.
deeply. Yeah, you should not use emergency fund if you have one for these kind of things. You should absolutely not.
Mhm.
Now,
Hmm.
I want to ask a question, which is, did you ever had a surprise expense, Sri?
I don't think I have too many, but I think like sometimes if like I forget to transfer money into the account that my rent goes out of, there might be like 20
Mm.
to 30 bucks of like late fees or like that might be like an expense that's unexpected sometimes and that's like I always kick myself. I'm like shoot. Because that's like easily avoidable, right? So
Mhm.
that would probably be the first thing that comes to mind. But since I'm like not fully on my own yet, not really too many like unexpected things.
Lucky you, good times. Nishi, what about
Yeah.
you?
Very lucky times. Yeah, so for me, I would say what my biggest expense wasn't exactly expense, but mine was job loss. When I lost my job, I obviously knew I had mortgage payments coming up, but it was a
Hmm.
new stressor, right? Like before, I was just like, oh,
Mhm.
I'm getting paid, and then that money just coming out of my salary. Now it's where's the salary? This is a big expense. That was my biggest one, I
Yeah,
think.
yeah,
Yeah.
exactly. Yeah, that's when you are stressed, right? When you don't
Hmm.
have emergency fund, okay, you don't know how to take care of your payments for quite a while, right?
Yep.
So before you go drastic step, you need to have some solution at least for your own, right?
Mhm.
What was the most unexpected bill you guys have received?
I get a lot of unexpected vet bills. I always like take my dog to the vet. I take my dog to the vet way too often. I take him any little thing that happens, I start to panic and I take him, and every single time it's like a $400 expense that was just unexpected. It's insane.
So there are pet insurances, Nisha. I don't know if you
Yeah,
know. There are pet
yeah.
insurance, but unfortunately, they're only for emergencies again,
Mhm.
right? They don't
Right.
cover the routine stuff.
Yeah.
Yeah.
Yeah. What about you, Sri?
Like most common one.
Hmm.
Uh, I
Most
don't know.
unexpected. You didn't expect it, and you got it.
Oh, like some random subscriptions is what I would say. It's always subscriptions that I just didn't know I signed up for or that
Same.
like somehow happened. Like I don't even use DoorDash like
Yeah.
typically, but like once I signed apparently I got like DoorDash like one subscriptions like
Hmm.
monthly for a few months and I was so silly I didn't even check and that was not good at all. And then I also lost on the perks of having that too. So I was like, okay, great. I lost all of it. So that's what I would say. Yeah.
Yeah. So the one I think which went to almost six figures is when I joined my father, who was in visitor visa to hospital. I got a bill for 6 figures. Uh, I was like,
Oh my
I
gosh.
was so stressed out because of that. But anyway, I had to talk to the hospital, deal with this for quite a bit of time because it's a big amount, right? So I had to have
Mhm.
a plan and pay whatever I can and those kind of things. But
Wow.
once I got six figures, and you have to pay it in certain time, it was so threatening. So, uh, but but the reality is, they will have some leeway for people who don't have insurance. But what is emergency like? Do you think it's just some fund, some extra amount in savings? What do you think is an emergency fund?
I would say, yeah, I guess I would classify emergency fund as extra savings that you don't remember is there that you can use in case something major happens. That's
Mm,
kind of how I would classify it.
yeah. Yeah, I think yeah, correct. But it should be somewhere which is kept, which is not accessible to you so easily, right? There's
Exactly.
many
Yeah.
basics. Basics. We will talk about these things, in the next part of the episode. Now we transition to who needs emergency fund. Does single family who household they need emergency fund? Do you think people who have two incomes, they need emergency fund, retirees, business owners, commission-based workers, people with stable jobs. Who needs one? Do any of these people need one? Three?
I think everyone does. I
Yeah.
mean, it's so important. I think if you are still financially like dependent on like someone else, you still technically need one too. I think there are so many stories in also like movies and real life where like there will be like a wife who has not gone to school, who doesn't have any working experience, who will solely rely on her husband for everything, and then they'll have one argument and that's it. Like he will freeze all of the accounts and everything, and there's just no access to money. I think every single person needs an emergency fund no matter what.
No
Like
matter how
just
rich they are or
exactly.
whatever
Right.
they're doing, even if they have the stablest income in the world, they need
Right.
the emergency. Yeah, absolutely.
Definitely. Yeah,
Yeah.
I agree. Everyone.
Yep.
Yeah.
Yeah, so the myth is only people living pay to pay paycheck to paycheck need emergency fund, but the reality is anybody higher the income, they need fatter the emergency because
Yeah.
their
Yeah.
expenses are higher, right? They need to
Mhm.
pay maintain that. So
Mhm.
there is a beautiful resource. We are going to start sharing resources. One is from Federal Savings Bank, St. Louis, has a great resource. We'll share this in our chat. Not only this, there are a couple more. We'll be sharing these resources, so they'll be very useful for you guys. So now, how do you calculate what is the um, quantity of emergency fund? Where should we? How much? Like, let's say I'm getting a 10K gross. What should I have emergency fund in my secret account, which is not so easily accessible? It should be easily accessible. Don't get me wrong, but you should not be able to touch it so frequently. It should not be visible to you so
Mhm.
out there.
Yeah.
How much
Um,
money should be there? Maybe Nishi start.
yeah, I think there should be enough for 3 to 6 months of living without the potential of living without a salary for 3 to 6 months at the very minimum, if not 12, because there's a lot of factors involved in how much you need, right? Like you could have like 3 people depending on you for your shelter and food and everything like that. So lifestyle, like for example, I'm definitely a little high maintenance, so I need to be able to make sure that I have enough saved up to where I don't have to change my lifestyle drastically.
Mhm.
What you see?
Yeah, I mean, I think 3 to 6 months is like the standard, they say, for like a young person. I think 3 to 12 months is a great way for you to be highly prepared as someone who's making like for an entire household. Um, just to be fully prepared, and also to factor in like inflation rates too, with like the like current political state, and like as prices continue to rise, I think it's incredibly important to increase your reserve of emergency fund, right? I think that's important. So yeah, 3 to 6, 6 to 12 is what I would say.
Yeah, I
Yeah.
think for me, it is much more than 3 to 6 months. I think I need to think about
Yeah.
at least 12 months because
Yeah.
otherwise I can't sleep. I need to pay
Mhm.
employees, I need to run
Of course.
businesses. So,
Yeah.
Yeah.
and there are so many volatilities, right? So I
Right.
have emergency fund for at least 12 months and I try not to touch it and I think of it as not my investment, right? So I just keep it
Mhm.
aside. um, and at the same time I want to put it in a way that I'm getting some interest back, if not like a major interest. There are some banks which will give me like 4% even in money market, so that's a good way to stash emergency fund for me. It's been like useful in tight situations. But business is more complex, and you need different levels of emergency funds for working capital, for all kinds of delayed payments and all that. But I think I'm 100% agreement with both of you. I think 6 months is like ideal minimum, for at least like a family. For a single
Mhm.
person, three could be okay. For businesses and complicated people like me, maybe you need 12 months.
Yeah,
So, but
definitely.
Yeah.
but it's the gross, not net. You should calculate
Mhm.
that carefully, right? So
Right.
that could be even 30% difference. So
Mhm.
try to have that much as gross. Just that gives you an extra buffer. But it really depends on, bottom line is, it really depends on your lifestyle and your thing. Imagine you too much of emergency fund is also not necessary. I used to just keep cash and saving just in case, just in case, but it's not necessary. What do you get in emergency fund? You get very less interest.
Hmm.
That's
And what
true.
does it mean? Can anybody
Right.
answer? If you need 100K, and if you're stashing 200K, what does it mean to the remaining 100K?
I mean, it's like depreciating value, right? It's
Because you're
just
not investing that. You're not
right.
investing that. You're not making your money work harder. Okay,
Right.
that's a good problem to have than no emergency fund, right? But
Right.
Mhm.
it is still a problem, right?
Hmm.
So
Yep.
you shouldn't leave too much buffer. I mean, you don't need to, but if you want to sleep better, have more, no problem. But just realize that you're not making your money work as hard as it should be. It's
I
not a
like
big.
that point because that's
Mhm.
definitely something I'm guilty of. I usually have too many emergency funds, so I'm glad you said that. It taught me a lesson a little bit.
Right. Yeah, I think you need to consult. You need to make your money work harder. Otherwise, you are
Mhm.
working harder all the time, right?
Hmm.
Yeah.
That's the. But you cannot make your money work harder when you have credit card debt of 100K. You can't put 100K in emergency fund. Now
Right.
that comes to a set of frequently asked questions about emergency fund, right? So I'll go one by one. You can kind of answer, and I'll ask you, maybe Nishi or Sri, and you just answer with your best opinion, and the rest of us will vehemently fight with you or agree with you. Okay.
Yeah.
Uh, so the first common thing: can a credit card be considered as an emergency fund?
I would say no because a credit card is more borrowed money, so it should be a backup option, but not an emergency fund. Yeah. A credit card could
Hundred
help you
percent.
survive an emergency, but it would never
Yeah,
prevent one.
100%. And why not? Because that credit card is only valid for 30 days, and after that you have to pay interest. It could be
Right.
very high interest, and you have to pay. Even if you're not paying interest, if you're paying
Mhm.
minimum, it can take forever to clear that, right?
Exactly.
So
Yeah.
Yeah, it's temporary, yes, but not as a permanent gap. Sri, do you agree with that?
Yeah, I do. I mean, I think
Yeah,
credit cards are just like absolute last
yeah,
like
yeah,
resort.
yeah.
Yeah.
So let's say you have three credit cards and you're not using all of them, you're using only one for daily expense. You have two
Mhm.
more credit cards. Do you think they're not used at all, that full credit limit? Do you think you can use that as emergency fund?
No, because I still don't have it. I still don't have the
Yeah,
money that the full
exactly.
credit limit is. So no.
Yeah. It doesn't matter your daily credit card or backup credit card. Doesn't matter.
Right.
Credit card is a
Exactly.
credit card, right?
Right.
So better not to touch it as an emergency fund. Even if you touch it, try to pay off as quickly as possible, right?
Hmm.
Now, retirement accounts. Can we use retirement accounts as an emergency, Nishi?
We technically can, but we
Mhm.
definitely don't think it's a good idea
Mhm.
because yeah, there's taxes, penalties, lost
Penalties.
growth. Yeah, so just because you can access it doesn't mean that you should, right?
Exactly. Exactly. So retirement is for long haul, right? If you touch
Mm-hmm.
it, if you meddle with it, it's not, the long haul is going south,
Hmm.
right?
Yep.
You not only stop your investment, you're paying penalties and
Mm-hmm.
taxes. It's all
Yep.
taxable.
Hmm.
Exactly.
But yeah, but IRA is not taxable. IRA, Roth IRA is not taxable, right? You could use it emergency, again, depending on other things not available, like don't have credit card, nothing is available, and that's something comes instead of touching traditional IRA, you could use touch Roth IRA, where
Hmm.
it's your money, you already pay tax, only growth is not taxed. So
Right.
but check with your CPA. The preferred is Roth IRA.
Hmm.
Okay, this is a tricky one. A certificate of deposit, can it qualify as an emergency fund? Three.
Yes, I would say so. I think like we have this common occurrence of like many different vehicles, talking about different vehicles of tools. It's not the first thing I would go to because it's not highly liquid. Because in an emergency, you're going to reach towards the most liquid asset you have, which is cash, right? In a CD, you're still going to have to pay some sort of penalty on it to
Penalty.
access it because there is a maturity rate that ties to it. But at the end of the day, a CD is like a guaranteed source of income too. Not income, that's not income, but a guaranteed source of someday
Um, yeah,
a lump
Mhm.
sum, right?
principal. Yeah,
Right.
principal,
Exactly. So I think yes, it is an option, but
but not the
this
first one.
also, right, this also will take some time as well. Like
Yeah,
it's not the fastest way to go about it, but yes.
I tell you what I like about CD. It takes a little bit of resistance to break a CD. It's not
Mhm.
like a savings account, right, where you can just write it. So that's why I like CD, because you need, there is liquidity. You will lose a little bit of interest, but also it takes an effort to break a CD. So that's why it's
Mhm.
good as emergency fund, in my view. As of course after savings and checkings, right? After
Mhm.
savings and checkings, CD is a good place to put an emergency fund. Not in the same bank you transact, maybe in a different bank, like maybe a credit union or something, where
Mhm.
you don't easily access, but that money is there, which gets some interest at least. It's not going to beat inflation, but the principle is there.
Mhm.
Now comes to similar question. Now, similar thing with stocks and mutual funds and other equity investments, right? They also need a little bit of buying and selling. But can we treat money in this brokerage account as emergency funds, Nishi?
I would say for this one, I would say while we don't want to touch it, worst
Right.
case scenario, this would be the one to go with. But our
Right.
reasons for not is because when you need the money yourself, market could be down, so it wouldn't help you in that
Yes.
scenarios. Selling investments during a downturn market can also be very, very painful. So yeah, we
Right.
definitely wouldn't recommend it, but if you need it, you know, it's understandable.
Better than retirement, in my view, because you're not paying
Oh,
taxes,
100%.
you're not paying penalty,
Mhm.
but it's just after. So I would do savings and checkings. First checkings, next savings, and then certificate of deposit, then probably stocks and mutual
Mhm.
funds, that kind of equity investments. Now here
Yep.
is a tricky one. This is like home equity line of credit. Can you use home equity line of credit as an emergency fund? Three.
Like, yes, you can, but then again, it's a line of credit. I think if we
Right.
just look at the principle of credit, that's never a good idea because you're going to have to pay a massive amount then again, whatever that may look like. If you're taking a loan out against your house, that could also bear bad things down the line too if you're not able to pay that back, right? So I
Mhm.
think that's just puts you more at risk. So I would say like yes, but are you willing to take that risk? I wouldn't. But then
Like
again, it
credit
depends
card, right?
how risky you
It's
are.
like
Yeah.
yeah, it's like credit card. It's just secured against the home. Actually, if you think about it, it's worse than credit card in that way. But
Mhm.
you should determine if you like if you need emergency funds. Is it better to use HELOC or your retirement? Let's say you have that option. I would go with HELOC because I don't need to pay taxes or penalties, right? So and then, but I pay it off as quickly as possible. And again, emergencies should be clearly defined, right? Why we need HELOC.
Mhm.
HELOC is better than credit card because it has good interest rates, but you are taking equity out of your house, so it will be treated as a loan on your house for all practical purposes. So you
Mhm.
should be careful about this. Otherwise, you are adding debt to your house and you keep paying that forever. But I've seen
Mhm.
people do stupid things like taking a loan from HELOC and putting in stock market. That's an absolute no-no, right? Because what if the
Right.
stock market goes down? Whatever investments you have put goes down,
Mhm.
right?
Yep.
Now you are paying interest on HELOC as well as the stock is down. So that's
Right.
like double risk, right? You should never do things like that.
Right.
But again, it really depends on what you're doing and what risk appetite you have, what you're getting into. You
Mhm.
could use things like that. Normally, if I were taking something for HELOC, I'll have a clearly defined plan to pay it off as quickly as
Mhm.
possible.
Mhm.
Now, in the same sense, can we use real estate as an equity, Nichi?
I would say no because
Mm.
real estate would take like time and effort to access, and if you're in an emergency, you wouldn't have that time. And also, it's not cash, right? Like home equity isn't a cash. So no, my answer would be no.
Yeah. In the same manner, can you? That's correct. I think I agree with you on that too, right? It takes sometimes 6 months to 1 year to sell a house, or
Mhm.
maybe longer in some markets, and you can't count on that money for emergency. Right? That's why you
Mhm.
have HELOCs and other similar instruments. But I don't think real estate assets in real estate can be counted as
Mhm.
towards liquidity or emergency of any kind. So just
Mhm.
I
Yeah.
think I would stay away from counting them. Similarly, what about line of credit against stocks? Like some brokerage offer that. It's a little bit higher interest, but they do offer it. What do you think of that, Sri?
Um, like once again, I think goes back to my same point. Like yes, but it's still credit. Like you're still taking a loan out on something you don't have. At the end of the day, like if you have prepared a fund, that's the first ideal option, of course, but sometimes emergencies come up where you've already potentially used your fund too. In the cases of like hospital and like medical concerns, it could be like a long standing thing too. So it's an option, of course, but it's not ideal. Yeah.
Yeah, this is good advice you've given. But if you ask me, okay, if you have no other option, you have stocks, and you have line of credit against stocks.
Mm-hmm.
I would prefer line of credit against stocks because
Mhm.
my
Mm-hmm.
stocks are still invested, right?
Right.
But line of credit, I'm paying interest, and but I think I'd be careful how much I would take. Right? For example, I would
Mm-hmm.
take if the bank is giving, let's say 70-80%, I wouldn't go and take all the 80% as credit line. Maybe a 10%, 20% of the worth of the stock because what if that stock value goes down? Right now, again, similar problem, right? So I wouldn't take a lot of it, but if I have if I need it and it's an emergency and nothing else is there for me, I would go there.
Mm-hmm.
But definitely, there are some banks which offer like around 4 to 5% interest rates on stock, so which is a good attractive one. In case you're paying like high interest credit cards or things like that, this is an alternative. But you're still invested in stock, right? But you need to make sure you pay it off as quickly as possible.
Mm-hmm.
Now, I think one of the main kind of learnings is that emergency fund is not something like savings or checkings. It should be in a place where you cannot easily access it. We all agree with that. And some good rule of thumb for question: is it safe to use it? Is it liquid? Can I access it quickly? Those are some of the rules of thumb which we can consider for emergency fund. So now, I'm switching topics a little bit, and um, how should you keep it, right? Again, we talked about savings, checkings, maybe 20-30%, right? And maybe 50-60% you should put in a certificate deposit, money market accounts, high yield questions. Should it be so? Few questions here. Should it be at a different bank, Nishi?
Yeah, yeah, I like keeping my like kind of like we said before, keeping emergency funds separate from our checking and our savings is kind of a good idea because then it's like a mental barrier kind of. We kind of forget about that money when we're like in the, when we're really wanting to spend some money and go shopping, we don't remember that money. We're only looking at the money in our checking, hopefully not our savings either there, but yeah, so I like to keep them separate.
One of the myths is, can emergency fund, you know, give you highest returns? Um, is that is that do you need to worry about returns for emergency fund? Sri?
Um, I mean, I don't think the entire point of the fund is to worry about return, right?
Mhm.
I think it's
Yeah.
a nice perk to have, like looking at like Nerd Wallet's high yield savings account. Like they have an entire breakdown that changes every week. That's what we show our clients, or like when they're thinking about opening up a new account, like which accounts have new fees, startup fees, and like interest rates. Like you can look at that, but I would say like that's not the point of this, right? The entire point of this is that you're like taken care of, you have peace of mind, and that you're like safe, right? That's the entire point of this, because there's like different buckets of money that you have, as you said, like working for you. You have home run money, which is like your money that's in the stock market, like cooking for you, like actually working. And then this money is just kind of
Mhm.
supposed to be on the back end, just kind of sitting a little bit. That's why there
Right.
can't be too much of it too, right? Which goes
Mhm.
back to that point.
Mm.
So I mean, like, yes, but like also like I wouldn't concern myself with it too much. So
Yeah, I think that's a fantastic answer. And again, it's the purpose is protection, not growth. So don't worry about not earning so much interest. It's okay. It's for emergency. So and with and here is a tricky question again. Um, there could be other priorities, right? What do we do? Like, do we save for other priorities, or do you save for emergency fund? Any of you have a perspective? So, for example, you have a high interest credit card and no emergency fund.
hmm
Should we pay the credit card payment rather than doing emergency fund?
hmm.
Three.
I mean, that's actually really difficult to think about for me. I think it also depends on like if you have any dependents too. I think you have people depending on you. That's what I would factor in. Like if it was just me, then I would probably chip a little bit more away at the credit card while putting a little bit less towards my savings. Of course, anything could happen to me. Who knows? But I think if I had dependents like kids or like a husband or whatever, then I would probably put more towards my savings. I think just it depends on the situation too, right?
Mhm.
And like what stage of life you're in as well. Yeah.
Yeah,
Yeah.
absolutely. What do you think, Nishi? What is your perspective?
Yeah, I agree with Sri. This one's definitely a very tricky question. I feel like high interest
Mhm.
credit card debt can grow really fast. So, like, if you're paying
Mhm.
like 20 or
Yeah.
25% interest, it's probably going to cost you more than what your savings account is going to be earning anyway. So, yeah, I'd probably personally try to chip away at the credit card debt. But definitely, like Sri said, there's a lot of other variables involved.
Yeah, I think I have a mix of both, right? Like here is a situation when you have credit card debt, high credit card debt, and you have an emergency as well. What do you do at the time? Right? So
Mhm.
I think I would balance it both, right? Removing credit card debt, removing, creating emergency fund. I think the right way to think about is balancing both.
Mhm.
And once you have it, a little bit control at least. Maybe I could balance investments also. But it's really not. I'm also if my risk appetite is low, I would it would make a lot of peace for me to remove the credit card debt and then worry about emergency fund. At least you have backup number two. All right. I think, a lot of people, the important point about talking about all these things is people to think about all these things, right? What they do may be slightly different from one person to another. But if you're not even thinking of about emergency fund, especially if you're an NRI and traveling between India and US, if you don't have that, if your parents need something and if you're running around for buying tickets and all that and expenses, it's not a good feeling, right? So we need to carry a little bit more emergency fund than normal local. And I think it really needs some thinking, right? what
Mhm.
what we should touch us and what we should ask our friends and those kind of things. I think we had a really good discussion around this. And we are putting a lot of resources which are publicly available in our um, YouTube link, and these resources give more insights. Again, if this is impacting tax or investment decisions, I think you should always check with your CPA,
Mhm.
your advisor. But our idea is to give as much information as possible so that you are your own advisor up to a certain extent, and then check with others if required. But the concept of emergency fund is, whether you have it or you're starting to have it, is the fundamental pillar for any investments, right?
Mhm.
Without this, you should not try to do stocks, mutual funds, and all that without having emergency fund. It's not worth it. So I think the first fundamental pillar is like take care of debt, take care of emergency fund, and then we'll talk about investment. Probably from the next podcast onwards, since we have covered the basics, we'll start talking about how we should treat
Mhm.
investments. Um, so, Nishi, do you have a
Yeah.
um,
Yeah, I'd love to leave the audience with a quick recap of this episode. So just a three-step challenge for when you're thinking about emergency fund basics. For the first step, calculate your essential monthly expenses. Second step, set a realistic emergency fund goal. And your third step would be automate your savings so you don't have to, think about saving 10% of your paycheck each month. So our challenge for our audience and our listeners would be don't focus on 6 months, focus on your first month, then your second month, and then your third. Because a lot of people here save 6 months of expenses and they get very overwhelmed. So don't focus on the final number immediately. First, focus on building the habit of first 500, then 1,000, then the first month. Those are usually the hardest milestones. So, a question that we want to leave you all with is if your income stopped tomorrow, how many months would you be able to comfortably cover your essential expenses without borrowing any money, using credit cards, or selling any investments? Um, And for our next topic for next week, we will be discussing how NRIs should approach investing. Thank you so much for listening in with us.
Thank you.
Thank you.
Thank you. Have a great day. And please look at our podcast website and also post your questions and all the challenges. Hope you have a great week.
Yep. Bye
Talk
bye.
to you
everyone.
later.
Thank you.
Thank
Bye.
you, Devin.